Hi everyone, hope you're all doing well. Today I'm going to talk about the 4 stocks that I bought. I bought these stocks not the week that's just gone, the week before that, so I'll just keep you guys updated with what stocks I'm selling, the stocks that I'm buying. Obviously I'm not selling many stocks in this bear market, but especially right now the buying is happening quite a bit because I'm trying to capitalize on some of these stocks that have fallen off the cliff, some that are absolutely amazing valuations. So yeah, as you've probably seen in the last few weeks, I am really capitalizing on this dip and buying a lot of stocks at the moment. So I'll go through these 4 stocks that I bought last week. I'll spend a couple of minutes on them, why I'm buying them stocks and everything like that, and just keeping that transparency up for you guys. And especially right now in the bear market, you know, this is when I want to make sure that I'm kind of being as transparent as possible and make sure you guys know what I'm trying to take the opportunities in at the moment. So yeah, if you could hit the like button if you're new, subscribe, that'd be absolutely amazing. And we'll take a look at these stocks. Now, as always, if you want to know what I'm buying and selling in real time, the place to be is the Patreon. I post when I'm buying and selling in real time on there, as well as 2 exclusive videos a week. I think this week just gone, we did a live Q&A session that you can go watch that if you missed it. And also we did the US portfolio review. I'll be doing a portfolio review on the YouTube channel next month, but if you want more of a regular portfolio update, that's where you want to be. And as well as that, it's only £5 a month, which is pretty decent value. You know, it's the same price as a pint, or in this case at the moment, after all this inflation, a pack of Lurpak butter, which isn't too bad. But we'll get stuck onto these 4 stocks. So number one, starting with this one, Celsius. So this is a bit of an awkward one because last time I told you guys, I'm probably not going to buy any more Celsius unless it goes around that kind of below $60, ideally towards the $40 range. Now, after watching this one for a while, and we had a bit of a bumpy time through this period, it was really quickly bouncing off that $40 range. So I just went, you know what, there's only positive news coming out with this one. And probably one of the things that pushed me over the line was I last week made a video talking about some updates with stocks. I talked about Gang, DraftKings, Celsius, and last week when I made this video talking about Celsius, the latest data suggested that Celsius are currently up 183% over the last 4 weeks, which is just insane if we have them sort of numbers coming in the next earnings report, which is absolutely amazing. So after I actually made this video last week, I actually buy some shares in Celsius. And I was looking at it going, you know, even through like when we're having the really tough weeks, it's not hanging down here for long. It's just kind of like bouncing every time. So when it kind of dipped down and it was kind of back in this sort of $50, $60 range, I thought, you know what, I'm just going to commit and buy some. And at the moment, it's looking like a pretty good choice because since then, like the stock is up over like 18% in the last 5 days. Not that I'm trying to time the market, not that I did it on purpose. It was pure luck, but yeah, it just seems like people are very quickly coming in to buy this dip, and it just shows you 18% in this 5 days. We've had a bit of positive 5 days, and a stock like this is up 18%. Imagine when these markets actually rally like 10-20%, what this is going to be up. So yeah, I did commit to buying some more. It probably will be my last buy, to be honest with you, unless it does this time drop to $40. I know I said that last time, but I'm pretty happy with my position size right now. And also, like I said, the thing that really did push me over the line is this, the latest data is very strong from Celsius. I'm sure most of you guys know Celsius do energy drinks. They're a bit of an alternative energy drink to the classic Red Bull and Monster ones. I've tried them personally. I think they're absolutely amazing. They have just expanded to the UK. So I think they've got a lot of growth ahead of them, even through like the US side of it, but internationally, I think there's a lot of growth ahead of them. Recent earnings, the financials of this company has just been absolutely amazing. It's one of those classic one where the financials are just going up and up and up, and then the actual stock price just goes lower and lower. And it's like, how is it doing this? Because obviously we're not focused on profit growth at the moment, but even the profit growth is insane. Like the last EPS was fantastic, and we're not really focused on that right now. And to be doing that as well in a time when so many companies are struggling because of logistic issues, inflation issues, and the profit is actually ramping up a good amount, and revenue as well. 166% with domestic revenue of 217%, and international revenue growth when you take out the Nordic regions was like over 100% once again. Is just insane. Like it's growing so fast. The profit's growing really fast as well. And when you look at the company here, like analysts are really bullish on this company, on the revenue growth and profit growth going forward. I know a few people say that it is a little bit of a higher valuation, but trust me, when you're a company at this sort of valuation, a 5 billion market cap valuation, it's not going to take long before this company is putting in $1 billion amount of revenue and they start ramping up that profit, it's going to drop that valuation very quickly. And also from a balance sheet point of view, it's quite healthy on a balance sheet point of view, which is absolutely great. So I did capitalize on some Celsius. The next stock that I picked some shares up on is one that I've not bought for a while, which was Pinterest. Wanted to buy a few more into Pinterest. It's not, this one isn't going to be a big position for me, it's just a mid-sized position, but I really like Pinterest. I think it's very unique in the social media space. I think it's very much different from the other social media plays. I like it where the angle that it comes from. I like that it's a bit more European based. I like the audience that it kind of draws in. It's a bit more unique, and also it's not really got a checkered past, shall we say, like maybe some of the other social media plays out here. I don't think it trades at a ridiculous valuation either for a company that grows at the rate that it is doing. And I'm sure that most of you guys probably know what Pinterest is, but if you don't know, you go on, it kind of gives you pins, and these pins give you ideas on something that you want to do. It's obviously more used by, I would say, a female audience, but even so, I'd say it does pull in quite a few males, especially in Europe. That's where a lot of the growth is. I actually use it myself. You can tell that I've been looking at a few setups at the moment on Pinterest, and I think it's a really good platform, and I think the more that add the e-commerce side into this business, it will do quite well. The recent earnings were pretty positive, even though they were taken a little bit negative. At the moment, EPS was a good beat, revenue still growing at 18%. There's a lot of concerns down here at the user growth. I think user growth will come back. The only reason why user growth is a bit negative at the moment is because we've gone from a CV situation where it boomed so much in like 2020 to 2021, where we went back to work and everything like that. So it declined in 2021, but the more we get into 2022, I think the user growth will come back. And even if the user growth doesn't come back, they have so much potential to monetize their users. Now, the big thing is ramping up their European side of the platform. So they have only recently started making adverts for the European side of the platform. So you can see here, US, on the part of it, US and Canada, they make nearly $4.98. And the Europe side of it, you can see here, it's down at 0.72. So this has a lot of ramp up to happen, especially when you can see here your monthly active users is massive in Europe. And even look at the rest of the world as well. That has big amounts of users as well. And look at the rest of the world, average revenue per user, 0.08. And that's growing at 164%. So you can see here, like the US side of it is ticking along nicely, but where their big user platform is, and the amount of money they're making from it has so much room to go to get to the US side of it, and that will keep ramping up at really high rates, 40%, 164%. So even if their user growth does slow down, Pinterest have been so slow to monetize their user growth that eventually when they carry on monetizing this up, they're going to still have good growth without user growth. And if they do get user growth as well, that's going to be a golden combination for this business. Growth wise, it's growing at good rates. Obviously, it's going to have a little bit drop off at the moment on profit, but that should come back. When you look at the financial health side of it as well, it's a very healthy on the balance sheet. It's also had a bit of a management change as well. So we'll see what happens there. I think that it was a good idea for Ben to step down. So I thought I'd just point that out, that he's going to be leaving the CEO role. But yeah, I think he still did a fantastic part of this platform, and I think his replacement is very good as well. And like I said, at this sort of valuation, it's lost a lot of its value down here. I think it's pretty good for what you're going to get when this company starts growing back its profit and its revenue going forward. A good balance sheet as well. So yeah, I'm a big fan of Pinterest at these sort of valuations. Next one is Disney. So I have been picking up a few more shares in Disney. I think sub $100 is really attractive from Disney. I think when you consider like it's below where it was, prior to its Disney Plus launch, it's kind of getting back down to them CV lows. Yeah, I think it's pretty good. Earnings on Disney were solid, I thought. When you look at the park numbers are coming back really strong. Disney Plus numbers, in a time when you look at Netflix and Netflix is struggling, Disney Plus numbers are still absolutely fantastic, and I think Disney Plus platform will be the biggest streaming platform out there in the future. So what you're going to have here is that the profit will drop down a little bit as it carries on reinvesting into the Disney Plus platform, but that will get its rewards in a few years' time, especially when that revenue growth keeps ramping up. And as well as that, the park numbers still have to come back a fair amount, and that will give them good amounts of profit as well. But the thing with Disney Plus, it's going to give Disney more revenue growth than they've ever had before. So having more revenue growth than before as well will also mean you'll be able to grow that profit a little bit faster further down the line, and probably also command a little bit of a higher multiple you would expect as well. So yeah, I think Disney is in a very strong place where you've got the park numbers starting to return. You've got Disney Plus that's still doing absolutely amazing even after the hard comparisons as well. And I think you're going to have a company here that's going to generate more. At the moment, in the short term, it might have a little bit of dip in profitability as it carries on reinvesting. But I think the moat on this, the Disney Plus side of it will give them more growth than they've ever had before. Yeah, I think it's in a really good place, and I think sub $100 for Disney is a pretty good valuation. And the last one is Shopify. So with Shopify, I'm still trying to get used to this stock split price. So yeah, it's a bit confusing. Down a huge amount. It's actually down 80% at the moment, and Shopify is back at prices it was at kind of around that 2019 period, which is absolutely insane. When you look at the financial improvement from Shopify in that time period, it's absolutely scary. They went down massively on their last earnings, which I actually think were pretty strong to say they're coming off tough comparisons. They're still doing quite okay in the business side of it. And Shopify itself, obviously it's going through some tough comparisons at the moment, but it's quite an untouchable platform, I think, Shopify. When you look at the moat, as soon as the sellers get attracted in, it's very hard to leave Shopify, and e-commerce is only still going to carry on ramping up as it goes forward. Shopify are improving the parts of the business with the fulfillment at the moment, and as soon as a company gets, if you want to get started selling online, you're going to go to Shopify, and as soon as they get brought into that Shopify system, it's very hard to leave when you integrate all your features into it. So yeah, I think Shopify e-commerce is going to carry on growing, and I think the place to be if you want to start an e-commerce business will be with Shopify more and more, and I think that will only help them going forward. And people complain about the valuation. I think the valuation is a lot more attractive than what it used to be. I don't think you're ever going to get a company like Shopify at a cheap valuation. It's a premium company. It's a wonderful company with the growth and the potential profit it'll drive in the future. 6 times sales, which is the cheapest it's been for a very long time. And people do say about the profit side of it, but the only reason why the profit side of it is a little bit lower than what you would expect is because it invests really heavy back into the business. If you look here, you can see that the cost of revenue and the gross margins. The gross margins is gross profit here is 600 million. So if you look at the gross profit, it is up from 2021, which is great. And when you look at the gross profit, they're expanding quite heavy into that sales and marketing, research and development with some of the fulfillment centers, and also one of the big loss comes from the firm side of it as well. So when you take all them things out, the benefits that we'll get in the long term, the gross profit is still moving in the right direction. If this company wanted to, it could be good amounts of profitability, but it just carries on reinvesting into that company to take more market share to drive up future results, which I'm absolutely happy with. You can work out the numbers that this company could easily be doing quite a few million in profit if it wanted to, but it's carry on keeping that lead up in that e-commerce space and getting people to stay on that platform and attracting new customers, which I think it's an absolute gem of an e-commerce business. So yeah, I'm a big fan of Shopify at these sort of valuations. So anyway, those are the 4 stocks I've been buying. Hopefully them couple of minutes on them were a little bit useful on them, and also just keeps you updated with what I've been buying. Let me know in the comment section what you've been buying as well. I'm always interested to hear your opinion in the comment section. But yeah, that's the video for today. Hope you enjoyed it. Have a great weekend, and I'll see you on Monday.